ultimately where I think we end up over the next 10 to 20 years is that Bitcoin does become the global reserve currency. And all of these organizations are going to be forced to go from kind of a USD heavy offering, whether it's product, services, whatever, to eventually then it's kind of this dual offering, right? So they start to offer a little bit of Bitcoin to their clients. Then it becomes a bigger part. Then it becomes actually pari passu in terms of size. And then eventually Bitcoin actually overtakes the US dollar products and services. And at some point in the future, you actually kind of get a full swinging of the pendulum, if you will, to, oh, okay, now we're like 95% Bitcoin and like 5% USD. Again, I don't think that's going to happen in the short term.
Hello, everyone, and welcome into crushthestreet.com. Pretty cool opportunity today. We're going to be speaking with Anthony Pompliano, famously known as Pomp, the Pomp podcast, an incredible resource for people. He's been on record, saying he's got 50% of his money in Bitcoin. And I like that. I like when people put their money where their mouth is. He's the co-founder and partner at Morgan Creek Digital. And we've had great discussions in the past with Mark Yusko, somebody who has been a real resource for us here. So it's great to follow up with his partner, Pomp. Pomp, thanks for coming on Crush the Street with me today.
Absolutely. Thanks so much for having me.
Pomp, if you would, give us a little background. This is the first time on your show. I know a lot of people know you, though. How you got started, what led you to the podcast, and what led you to where you are today?
For sure. Went to college at Bucknell University, studied economics, was in the military for a while, did a deployment overseas, came back and built and sold 2 small technology companies before going out to Silicon Valley and running a number of product and growth teams at Facebook. Eventually was hired at Snapchat as the head of growth for a little bit, and then started investing full time kind of beginning of 2016. So been about 4 years or so. Over the last 4 years, I've invested over $100 million in early stage companies. I would say that the bulk of that has been in kind of crypto, blockchain, Bitcoin companies, and really got the start with Bitcoin in mining. So was basically pitched on investing in a mining facility, took some personal capital, went ahead and made that investment, kind of really got to understand how the network runs, why it's important, how the computing power secures the network, the financial incentive, all of those things. And over time just became convinced like this is not only going to be a thing, but it's probably going to end up being one of the most important things in the future. And so just like, kind of any entrepreneur or investor, when you see something that is highly disruptive and probably has a low probability but high potential outcome, I got really excited and made 2 very important decisions in hindsight. One was to go ahead and take 50% of my net worth and go ahead and invest it. So this wasn't something where I invested a little bit and it just grew into that. It was actually kind of a very intentional decision. We can talk about why that was. And then the second thing was I was going to focus kind of professionally on the space as well. And so that's led to everything from investing to all the content stuff as kind of an additional aspect of what I do professionally.
So news today on CoinDesk, crypto exchanges see a big drop in volume as Bitcoin volatility approaches 2020 low. I wanted to kind of get your thoughts on this global pandemic, and has it been a good, bad, or neutral thing for Bitcoin here? Obviously, people like to criticize Bitcoin in its current moment. But I mean, go back a few years, go back a few more years. I mean, look where it is. It's pretty amazing to see where Bitcoin is. And I like to remind people of that before they start criticizing it. But in light of what we've seen over the last couple months, what are your thoughts on Bitcoin, and is it faring to your expectations?
Yeah, so let's start kind of historical context. Bitcoin's been the best performing asset over the last 10, 11 years, not even close. And so a lot of people kind of scoff at that and they say that's kind of an outlier. But even if you go back the last 5 years or so, it's still the best performing asset class by far. And so that is important because it kind of dispels or mitigates the argument of like, oh, it's super volatile. Well, of course, anything that has incredible upside is going to be volatile. Go and you look at Amazon stock, for example, since it went public. Basically, what it did was it went up a lot, but in between it going from being public to today and having gone up a lot, there was incredible drawdowns. The average intra-year drawdown is over 30%. It drew down over 95% at one point. And so just volatility is bad when it goes against you. It's great when it goes in your direction. Both Amazon stock, obviously, but also Bitcoin has trended in the right direction over long periods of time if you're long that asset. And so if you look at kind of 2020, there had been this conversation around Bitcoin as a non-correlated asset that can do incredible things for a portfolio, not from just a return perspective, but also changing the risk profile, the Sharpe ratio, things like that. And so I think that there's a lot of people sitting right now saying, like, what do you mean Bitcoin can't be non-correlated? When everything went down earlier this year, Bitcoin went down by 50% on a single day. And then when stocks rallied, Bitcoin rallied. And so like it's highly correlated. What I think people have to remember, though, is like if we learn our lesson from history, in 2008, during the financial crisis, there was about a 6-month period where there's a liquidity crisis. And so during that liquidity crisis, gold dropped 30%, right? 30%, along with all other assets, right? So during that liquidity crisis, kind of all asset correlations go towards one, or they trend towards one. But after that, when the government stepped in and printed hundreds of billions of dollars, gold then went on an absolute tear in 09 through 11, ended up hitting an all-time high, 200% increase, et cetera. And so that's what I think we're kind of in the early days of right now, which is we're having a liquidity crisis. Even though it doesn't feel as bad as it felt in March and April, we're still in that liquidity crisis. Asset prices started to trend towards one. So everything went down, the dollar strengthened. Now you've got the government printing a bunch of money and it's flooding the market with dollars. And so over time, what you're going to see is you're going to see these assets continue to increase in price in US dollar terms. Some of that's from the dollar being devalued. Some of that's from the assets actually just growing in value. And so right now, Bitcoin's the best performing asset of 2020. Right, Bitcoin's up like 30-40%. I don't know where it is today, but it's up materially compared to stocks or gold or kind of other commodities. And so when you look at that, you're like, wait a minute, how is Bitcoin the best performing asset class right now, even though it went down 50% in a single day earlier this year? And it goes back to that whole idea of volatility, right? If everything gets drawn down, if you're the most volatile, you're going to draw down the most. But then when everything goes up, you're going to go up the most. And this is where you see somebody like a Paul Tudor Jones stepping in and saying, look, I'm going to put 2% of my portfolio in Bitcoin because I think it will be, and a direct quote was, the fastest horse. Meaning, hey, I think everything that basically isn't dollars is going to be inflated in price in the future because there is so much quantitative easing going on. I just happen to think that Bitcoin will outperform everything else because it is the most volatile. I tend to think that's a pretty good analysis. And so that's kind of where I think we are right now. But that obviously is another kind of 18 to 24 months for all of this to really play out.
Pomp, you're such a public figure and people know you. I mean, in the financial world, you're very known. And so I'm wondering, what sort of blowback do you hear from conventional money, and maybe bring that to the table? Like, what are the concerns that the big money has when it comes to Bitcoin and why they question the future of it, and maybe address it if you would?
Yeah. It's actually pretty interesting. Like, I almost never get what I would consider like blowback or any sort of like really negative kind of talk from professional investors, right? They understand the argument that's being made for Bitcoin. They may not agree with it, right? But a lot of times they're kind of intellectually honest enough with themselves to say, look, I understand what this person or this group of people is arguing. I understand what would make them right. I understand what would make them wrong. I tend to think that they're wrong for a whole host of different reasons that we can get into. But they don't necessarily say like, oh, I think this is a scam, or I think that this isn't valuable or anything like that. I think where you get a lot of that type of talk or that talk track is you get it from like the anonymous accounts on online, right? It's kind of people who aren't sitting in that professional investor seat, the people who get tied to kind of the religious arguments around a lot of this stuff, the people who necessarily aren't, for a living making those intellectually honest and courageous decisions on a day in and day out basis, having to change their mind with new information, things like that. So when it comes to professional money, I have yet to have a conversation where somebody says, hey, I don't understand what you're saying, right? It's always, okay, I get what you're saying. The main reasons why they might disagree is, one, they don't think there will ever be any inflation, right? If you look at 2008, 2009, coming out of that, there was never the kind of the hyperinflation that many people feared. So that's one piece. The second thing may be that they believe that there are external forces that will prevent this from happening. So say the United States government banning ownership of Bitcoin for US citizens, something like that. There's always the concern around some sort of technical issue. So whether that is bad code being introduced, some sort of hack, 51% attack, those types of things. And then the fourth thing I would say is people basically would make an argument that eventually the Bitcoiners will just get tired and bored if it doesn't become the global reserve currency in a short period of time. And so they'll just walk away. They'll go find something else to go, kind of yell and scream about. And a lot of people you see, they kind of say that about like the gold community, right? And kind of '08 to, let's call it, 2012, 2013, there was this like fervor around gold and what it was going to do and all this stuff. And then you've really gotten kind of 5 to 8 years of kind of just going sideways, right? It just kind of traded in a range and it didn't have any kind of massive breakout, but it also didn't go to zero, right? And kind of drop a lot either. And so people just kind of got lulled to sleep a little bit around that gold narrative. Now all of a sudden we're back in a crisis situation, and kind of that excitement is back around gold. And I think that Bitcoin's going to be very similar. And so I think those are kind of the four major detractions from the professional investors who say, look, I get what you're saying, I just don't think this is going to happen for one of those four reasons.
Pomp, it was really birthed out of the '08 crisis, Bitcoin, as you know. And it started with, people that were interested in technology, but also that real libertarian crowd of, liberty, sound money, questioning of the financial system. So Bitcoin going mainstream, is there going to be a bridging of the gap of that community and the mainstream that you see happening? Or is the mainstream going to continue to reject it because of the competitive nature of Bitcoin to the financial system?
Yeah, part of the beauty of Bitcoin is Bitcoin really doesn't care what anybody says, including myself, you, or anybody in the Bitcoin community or anyone outside the Bitcoin community, right? It is this thing that is unemotional, unbiased, not manipulated, and kind of, it is a programmatic protocol, super transparent, decentralized, no one owns it. And the reason why that's important is because if there is any connectivity between the legacy world and Bitcoin, the legacy world is going to have to cater to Bitcoin. It's going to have to kind of cross over to Bitcoin's, side of the river, if you will. It's not going to be Bitcoin, like the CEO of Bitcoin being like, oh, I'm going to go and go talk to the CEO of Goldman Sachs, right? There is no Bitcoin CEO. And so what I think that ends up bringing is this world where like, well, let's just look what's happened. So if you go back 5 years, almost nobody on Wall Street was talking about Bitcoin. Right? Nobody cared. It was kind of this like super fringe thing. Maybe you had some people talk about it, like if they went to dinner, but it was kind of whispered about, and it wasn't really kind of big in terms of what people were focused on. You had kind of the partners at Fortress maybe buy a little bit and things like that, but that was pretty much it. Fast forward now, there's not a single entity, organization, or individual on Wall Street that doesn't know what it is, has probably looked at it. And many of them are actually participating in some form or fashion, whether they own Bitcoin, they're invested in infrastructure around Bitcoin, they've evaluated, decided not to participate, right? There's just something that they've done. And the reason why I think that's important is because ultimately where I think we end up over the next 10 to 20 years is that Bitcoin does become the global reserve currency. And all of these organizations are going to be forced to go from kind of a USD heavy offering, whether it's product, services, whatever, to eventually then it's kind of this dual offering, right? So they start to offer a little bit of Bitcoin to their clients. Then it becomes a bigger part. Then it becomes actually pari passu in terms of size. And then eventually Bitcoin actually overtakes the US dollar products and services. And at some point in the future, you actually kind of get a full swinging of the pendulum, if you will, to, oh, okay, now we're like 95% Bitcoin and like 5% USD. Again, I don't think that's going to happen in the short term, but we are on this trajectory, and you can see the adoption of usage and kind of products and services that are being built. Fidelity is a great example where 5 years ago, they were doing pretty much nothing. Now, all of a sudden, they've literally got a dedicated part of their business, and the CEO is talking in their annual letters and on television about, hey, Bitcoin and digital assets is going to be a major part of our business in the future. Like that just takes time. And so the more time that we have in the future, I think the more organizations that will kind of end up in that spot as well.
I love how you're articulating the growth of Bitcoin in this environment. Trace Mayer was the one who introduced me to Bitcoin, and he's now off the radar, sadly. So talking about the growth of Bitcoin, how important are voices like yourself and Trace Mayer and others advocating Bitcoin and spreading the word on like a marketing front, and then, you know, the fundamentals of it going out, or does the fundamentals automatically, you know, lead to marketing? I mean, is that synergy that happens in a space that's growing?
Yeah, I'll talk about the fundamentals first, then we can talk about like kind of the marketing. And so on the fundamental side, a lot of people want to compare Bitcoin to a stock or a company, right? They say, oh, it has no cash flow. It has, you know, all the things that you would normally assign value in a company or corporation. Bitcoin doesn't have. So therefore, this is where you get the Warren Buffetts of the world saying, you know, it's worthless. Well, if you look at what actually drives the value of a company, for example, it's things like revenue, profits, GDP, interest rate decisions, right? All of those types of things. Bitcoin doesn't have that, but Bitcoin's also not a company. Bitcoin is a network. And so what makes a network valuable, right? The Facebook social network. What makes that valuable? Well, it's the number of participants, right? It's the length of time that they stay engaged and active. And then also what ends up being is you need a flywheel. So that flywheel ends up being the virality of the product. And as we know from history, PayPal and all these other companies, money is the most viral product in the world, right? Because ultimately, every time I go to use the money, I have to engage with somebody else, right? I have to send it to somebody. So if they are already using the product, then obviously they're not kind of a new convert, if you will. But if they're not using it, they then have to get up to speed in order to accept that money, right? So money is the most viral product in the world. Now, as you look at the fundamentals, everything is trending in the right direction over long periods of time. So you get users going up, you get number of transactions going up, you get the transaction amounts going up in terms of on-chain adjusted annual volume. A lot of people don't know this, but actually there was more adjusted on-chain transaction volume for Bitcoin last year than the transaction volume that was done on Apple Pay, PayPal, or Venmo. So it's actually bigger on a global basis than those three products, which we all think of like no-brainers, they have value. So obviously something's working with Bitcoin. But on top of that, you also get the hash rate going up in terms of the computing power, securing the network, et cetera. So all the fundamentals trending in the right direction that you'd want to see as somebody who believes it's going to have value in the future, or more value than it has today. In terms of marketing, I don't think anyone's doing marketing for Bitcoin. And that's what becomes really, really interesting. Because if you looked at what people in the Bitcoin community do, they're learning about Bitcoin, right? A lot of it is, hey, I'm talking to somebody, I'm trying to understand how they think about it. I'm trying to understand where they think it's going to be valuable, why they think it's going to be valuable, how will it be used, where it needs to improve in the area, you know, what products are interesting, all those types of things. Well, if you then if you call that marketing and you were to go assign that to the legacy finance world, every person on Wall Street is marketing the US dollar. Because what do they do all day? They sit and they talk about all the same things. They just talk about the US dollar denominated assets or the US dollar. And so I don't think of it necessarily as marketing as much as there's two financial systems currently. One is a inflationary US dollar denominated financial system that is driven by the monetary policy of a private organization, right? The Federal Reserve or central banks around the world. And those decisions are driven by humans. So all of the emotions, the bias, right? All that kind of stuff that goes into human decision making. That is a system that the world has accepted and thrived on for a very long time now. But now there's a second system called an alternative financial system. That system is a deflationary system that has Bitcoin as the core unit of account or Bitcoin denomination. And the monetary policy is driven by a decentralized organization of volunteers on the internet who are only able to make decisions if majority of them all agree. And because there are millions of people involved, basically they can't change the monetary policy, and therefore the monetary policy is transparent and programmatic. So there's no guessing what is the next interest rate decision like there is in the US dollar system. We know exactly what the monetary policy decisions in the future are going to be because they're fully transparent and they're programmatic. And so ultimately, if you go back to like, why did I put 50% of my net worth in the Bitcoin system? It's because I believe there's two systems. And so I'm 50-50, or I'm actually a little bit more in the Bitcoin system now than the US dollar system. But ultimately, I believe that there is a very serious chance that the alternative system today becomes the standard system of tomorrow. And the standard system today becomes kind of the alternative system of tomorrow, the smaller system in the future. And so that's really what I think the trade-off is. It's just, how much do you believe that the status quo will remain the status quo? And so I always tell people, like, do you think that the alternative system has a 1% chance of potentially succeeding? 5%, 10%, 50%? Like what's your number, right? And that's what actually your portfolio should mirror. So if you believe that the alternative system has 0.5% chance of succeeding, right? It's a non-zero chance, but it's very, very small. Well, then you should be 99.5% allocated to the US dollar system and US dollar denominated assets. And you should be 0.5% allocated to the Bitcoin system. If you're 2% or 5%, then you should be allocated 2 to 5% in this new system. And so that's kind of that trade-off, I think, is really important to understand, because it's less about like, go market Bitcoin and get people to buy Bitcoin. I tend to think that that's kind of a fool's game. It's much more about the idea that the competition that's occurring is at the monetary policy level, and that programmatic, transparent monetary policy will ultimately be deemed superior over a long period of time. And so it's less about an asset, and it's much more about joining an entirely new financial system and what that means for your wealth, different organizations, and kind of the world in general.
Yeah. Well, I love that you were able to be so confident about Bitcoin and put your money where your mouth is, because, it's hard for, economists to predict the future on anything. I mean, just to decide how many people were in disagreement on what happened a couple months ago. And, is this bottoming out, the fundamentals? I mean, look at Warren Buffett. He's kind of looking like an amateur with what happened this year, buying high, selling low, Berkshire Hathaway underperforming. And so, I'm also open to the idea that I don't know what I don't know. So you have to invest accordingly in that situation as well, which I think is prudent. But, I kind of wanted to touch on that in line of value investing. I mean, people are literally talking about the death of fundamentals. I mean, and that's what we have right now. We have money printing, trillions of dollars going into the system, and the death of fundamentals. I mean, stocks are almost back to where they are or where they were. I mean, the NASDAQ is now over and beyond. And based on what? Based on potentially lower future revenues, maybe no future revenues for some of these companies. What do you make of this? And I think it indirectly benefits Bitcoin ultimately, but what do you make of this environment where we're in, where even Warren Buffett is seemingly confused?
Yeah, so I think there's two major factors here, right? So one, you've got to understand kind of the structural element, right? And this is where all of the macroeconomists, they really kind of, make their bread, if you will. And then you've got to understand kind of the micro, which is all of the individual companies and the fundamentals there. And what people have to remember, and it's very hard to remember this if you aren't coming from the macro viewpoint, is that the macro always trumps the micro. Right. And what I mean by that is there are companies, literally, take Lemonade's IPO recently, right? Lemonade, I think in 2019, if I remember the numbers correctly, did $65 million in revenue and they lost $100 million. But they're now trading at a $4 billion valuation. It's like 40 plus times revenue, right? In terms of wherever the stock is exactly. And so when you start looking at that, there's a lot of people who start scratching their head and say, how the hell does that happen? But then if you look at it and say, well, what are the best stock markets so far this year? Zimbabwe and Venezuela are two of the best stock markets in the world this year. Why? It's not necessarily that the company's stock, right, the value of those organizations increased by hundreds of percent. It's that the currency that those stocks are denominated in depreciated so drastically. And so if you think of the Apple stock price or the Lemonade stock price or other company stock prices, it is a fraction, right? Meaning that there's a numerator and a denominator. The denominator is the dollar. And so what we're ultimately seeing in the stock market is we're seeing the devaluation of the dollar, and therefore that denominator ends up actually being diluted, and you get the increase in price. And so literally that is just the definition of a central bank injecting massive liquidity into a market, inflating asset prices. But the question becomes, right, and kind of what I can keep saying is like the quadrillion-dollar question right now is, can they do this forever? Right. And what I mean by forever is like they did it already. spend 3 or 4 months. Could they do it for a year? Maybe, right? They'd have to print a lot more trillions of dollars, but they could probably do it for a year. Could they do it for 2 or 3? How long does it take for the economy to recover, right? There's been this dislocation in the stock price and the economic reality on the ground. And so it really depends on how long is the central bank, one, willing and able to continue to inflate these asset prices to allow the economic recovery to actually occur and allow the economic data to catch up to those stock prices. I tend to think that it's going to be really hard for them to do that for a long period of time. And so we're either going to have a sharp V-shaped recovery in economic data in order to kind of sustain these types of stock prices, or what you're going to get is, I bet you they can hold on right till about an election time, right? Kind of going into the election. And then kind of after that, you get massive sell-offs because ultimately the macro structure of the market ends up changing. And mainly it's because they stop supporting it with all the quantitative easing.
Yeah, it really feels like the economy is just cliffhanging and it's just being held by the fingertips and holding on for everything it has. As we close here, millennials are largely getting into the stock market now, arguably with their stimulus checks or whatnot, but buying stocks at very, very high valuations and getting into these tech stocks mostly, maybe in words of advice, words of wisdom, I mean, what would you have for people that are in this environment right now? All of us, I mean, whether you're a baby boomer, millennial, I mean, we're all dealing with the same circumstance. I mean, general words of wisdom in this unprecedented time. I mean, what words would you have for us?
Yeah, I don't know necessarily if I have advice as much as I tend to think that the classic rules are classic for a reason, right? So simple things like, hey, you want to buy things low and sell them high. If something is at its all-time high, sure, it can go higher, but there's probably a chance that, that's not the best time to buy, right? Looking at things like valuation multiples and kind of all the ideas of value investing, the reason why they work is because they're tried for decades and decades, right? They've been proven through market cycles. The second thing is, like, for a lot of young people, what I tell them is like, hey, you should go invest some money. You should invest exactly what you're willing to lose because there's a good chance you may lose it. That's fine, right? When I was younger, and had a little bit of money, there's no reason why I didn't want to go do this, but only do what you're willing to lose, because really what you should be optimizing for is learning. Right. And so the best way to learn is actually get some skin in the game, because if your money's involved, then you'll pay attention. Just don't go take, 100% of your cash checking account and go ahead and go dump it into a Robinhood account and, lever up and just cross your fingers. Like, that sounds like it's a pretty good recipe for disaster. And so I tend to just think that, like, this is one of the areas in life where, like, moderation actually will serve people well. But also, if you're a young person, like, you're getting a gift. And that gift is that you're getting to live through one of the economic crises that will be studied for decades to come, right? I was basically just entering college I was in college when the 2008-2009 crisis happened. And I always tell people, like, I was just old enough to know what was going on and pay attention, but I didn't have enough assets to actually, like, financially get hurt. So I almost got like a front row seat without getting hurt, which was great. Well, now kids are in the same position. If you're a young person, like, you don't have enough money. Like, literally, if you lose all your money, you'll probably make more in a single year in your 40s than you have right now, right? So, like, in the grand scheme of things, you have a very small amount of money. It's just because you haven't had time to build wealth. And so, don't be worried about that, and just use it as a learning exercise, because the education you get right now will actually serve you for the rest of your life. The money is less important.
Good words right there. Yeah. And it's something I like to point out to people too. I mean, talking to someone who's saved 40 years worth of wealth and investing that, I mean, it doesn't matter what that number is. It means a lot more to that person than somebody who took a week's paycheck and threw it at the market and did something with it. So good words there. Anthony Pompliano, everybody. Anthony, if people want to learn more about you, the work you do, please let them know where they can go and what they can expect to find.
Yeah, basically 3 places. You can go on Twitter. My Twitter handle is just @Pompliano. YouTube, just search Anthony Pompliano. We put up a couple of videos a day there. Or I write a daily letter. It's about 50,000 investors or so about business, finance, and Bitcoin. And that's just pompletter.com.
Thank you, sir, for your time here at Crush the Street.
Absolutely. Thanks so much for having me.